Hey guys, good afternoon, everybody. Today is Wednesday, March 19th. It is 3:03 right now. Our scheduled mentoring session is for 3 o'clock. So I'm going to go ahead and set up this room real quick, and then we will get started shortly with our session for today. So I've got a few things here to update, and we should be good to go. Next thing. That's good. So let me go ahead and send this link out to you guys here in the premium. Hey, what's up, Vapid? Good afternoon. I just posted the Zoom link if you want to get in on the Zoom, Vapid, on the Discord. I know I just posted it up right now, so if you want to grab that, feel free. Or if you want to stay on YouTube, that's cool too. But all right, guys, good afternoon, everybody. Today is Wednesday, March 19th. It is 3:05 right now. Our scheduled mentoring session is for 3 o'clock. Just a reminder, this session is for you guys. So whatever questions you guys have, feel free to put them in the chat. I'll answer whatever you guys need help with. Main focus for today is probably going to be the MPSv2, and then I'll also show you guys how I set up my charts here if you guys want to set them up just like I do. So yeah, if you guys have any questions, feel free to put your questions in the chat. Otherwise, main focus for today is really going to be the MPSv2, some examples, my confluences, and my setup over here with regard to my tabs. So, hey, Mike, Christian, PC, everyone, good to see you guys here. I'll give it a few minutes for people to get in. Hey, what's up, Siobhan? And then, yeah, if there's anything specific you guys want me to cover, feel free. I can jump around. If you guys have any specific questions, I'll probably answer those first before we go over the MPSv2s. But yeah, let me go over here and I'm just gonna edit this real quick. So stuff covered over here. Oh, we're good. Looks like it is good. So I don't really need to change anything here. Hey, PC. Yeah, no, definitely. So PC is asking to please go through the A++ setup. Yeah, that's perfect. So we'll go over, here, I'll put the list over here of things that we're going to be covering. So main topics for today, and I'll do this stuff in order. So I will show you guys my TradingView setup. Then I will show you MPSv2s, examples, MPS, or we'll say A++ setups. And then Confluences. I look fine. That's the main stuff for today. I mean, if there's anything else that you guys want me to cover, feel free to hop in the chat. But yeah, Shabam said, I think just covering MPSv2s. I understand TPO confluences, etc., for the best setup, but majority of the time they always hit as standalone. But what I do what do we look to avoid for just normal MPSv2 setups? Okay, yeah, we'll do that too. Hey, Prillium, how's it going? Yeah, so I'll show you guys kind of the red flags. It's kind of like the main things that we look for, like the sessions, the news price, stuff like that. The news price, not so much because if you guys have been following lately, I mean, the news isn't as strong unless it's like a high impact news event. So it's mainly like the sessions and for the most part, it's just the sessions, unless I see like an opposite confluence. But we'll go over that stuff too. Confluences that I look for, things I avoid for entry. I usually don't really avoid stuff. The main thing I avoid is really just the red flags, but we'll look over all that stuff. So, all right, guys, good afternoon, everybody. Again, today is Wednesday, March 19th. It is 3:08 right now. Looks like majority of people here are present that plan to be present. And we will start off with my trading view setup. So, okay, let's start off right here. I'm just going to show you guys how everything is set up so that you guys have an idea of like what my chart will, you guys see my charts every morning. So you guys will have an idea of exactly what I look for. So for my main chart over here, well, my first chart, let me take this stuff off the chart real quick, settings. I don't know why trading view did this. It's kind of weird. Now I got to do this for all these charts. I mean, I guess it makes sense if people are like looking to focus on specific sessions, but it does kind of make things a little messy. All right, so I'm taking these blue bars off the chart. If you guys have these on your chart, just go to your settings, go to electronic trading hours background, and then change the opacity to 0. If you want to take it off, you don't need to take it off, but I like my charts pretty clean. So starting off with my first tab here. So my first tab is going to be 6 charts. If you guys want to set it up like this, you'll usually have like 1 chart. I have it set to 6 right here. I only use this to identify the overall trend. So I have a couple indicators on here. A few that are important, most that are not. Really, you're just going to use this to identify trends. So you probably just want to have the pivots on here, maybe the trend meter. And that's going to be my first label. So I have 1 minute, 5 minute, 10 minute. These are going to be the lower time frames. Then I have the higher time frames, 30 minute, 1 hour, and 4 hour, just to see where everything's at. I don't necessarily look at one specific one, but I try to see overall where the trend's at, right? If the overall higher time frames are bullish, then I'm like, okay, this is probably going to be where price is going to end up if it swings the other way. And then vice versa, if the lower time frames are bullish or bearish, I'm usually indicating that's going to indicate to me that price is probably going to follow if it continues in the direction of the higher time frame. So that's gonna be my first tab right there. You guys, again, you don't need this, but I use this for my Confluence just to identify where the overall trend is. I'm not gonna go over this one right here. This is for the breakout. Obviously, if you guys want to have this here for the breakout, you guys can, but not everybody takes the breakout. This is mainly just for people who take the breakout, and I just have this up here to mark it up so it's not messy on the main chart. Over here for my main chart, so this is where I do all of my analysis, and this is where I identify my entries. For this right here, there's a couple of indicators that I have on the chart. I have the pivots, the sessions, the reversals indicator, the momentum indicator, and the trend meter down below. On top of that, I also have the trailing stop indicator that has the ATR down here. So again, that's just a couple of different indicators. I'll put a list right here. Main main chart. So I have the K2 sessions, K2 pivots. You guys don't need all these, but this is what I have. Trend meter, K2 momentum, K2 reversals, and I think that's it. Yeah. So for the most part, that's what I have on here. I got the sessions to identify red flags. I got the pivots to identify trend and pivot bounces. I have the trend meter down below to identify the trend. Just add stop to my ATR. Okay, so sessions for the red flags, pivots for the trend and bounces, trend meter for the overall trend, momentum for momentum direction, reversals for continuation and reversal patterns, and the trailing stop down below over here for the ATR. Those are the indicators that I use on here. Again, if you want to set it up this way, feel free. If you want to take off some, add some, you guys can do whatever you want. But this is what I have here on my main chart. And this is where things start to change a little bit. So for this one over here, this is my TPO chart. I use this to identify market profile. So if you guys want to add this to your chart, basically I have one for the 1 minute. I've got one for the 30-minute. And then I have one for the 1 hour. This is where I identify most of my confluences. You guys don't need this. It's not like super necessary, but if you guys want to have this on your own chart, you guys can. Otherwise, if you're on my live session, you can I'll identify where the rejection points are going to be at. So again, I have 3 different time frames. I have the 1 minute, 30-minute, and 1 hour. To set this up on your chart, you're going to go over to your indicators. Here, I'm going to turn it off so you guys can see. I'll set it up like pretty much from scratch. So right here on the 1 minute, if you want to set up the TPO, you'll go over to indicators, type in TPO. It's a built-in indicator with TradingView. It's called time price opportunity, or TPO for short. You click on that right there. And then these are the default settings. So if you have your default settings right here, it sets a 30-minute. I pretty much have everything to default. The only difference here is that I take off the blocks. So you'll see this is what mine looks like. It just shows you the lines, and this is what the main one looks like. So like it's pretty much the same thing, except I take off all the stuff that's kind of irrelevant for me, right? I don't really care about the volume. I don't really care about the blocks. All I care about are the bounce points. So that's why I have these right here to just show me the bounce points. To get these settings on your chart, you just need to go over here to the settings. You'll leave all this stuff at, let me check my settings on this one. Yeah, so you'll leave all the stuff at default. The stuff that you're going to change is under style. So if you want to take off the blocks, so just uncheck this. If you want to take off the letters, uncheck that. That's what I do. I don't really care too much about that stuff. They're there for a reason, but I don't use that specifically. For point of control right here, I will have this extended. And I also have this colored green. It's up to you. It's black normally, but for me, I like to have it stand out. So I have it over here, take off blocks, take off letters. For point of control right here, you click this to extend, so it extends out a little further. And then I change it to green, because this is like where this is basically where fair value is. So like for me, I like to see this as green because this is where price tends to go back to. For value high over here, I have this extended as well. And because this is usually a selling point, I have this as red. It's normally black, but I change it to red so that I know like this is obviously where people tend to sell at. And then for value low, I have this to extend as well. And then I change this to green because that's usually where people buy from. So, I just try to keep it as straightforward as possible. This is like the fair value area. When price gets up to this point, usually people will try to sell off. Sometimes you get a fake out up here and price comes back down. And then vice versa, price is down here, same thing. Price comes below here, bounce up, come back to fair value, which is going to be point of control. The other settings here that I have, so this is basically to clean up the market profile. Then I go to volume profile here and I do the same thing. So I don't really care about these volume bars over here. So I'm going to go and just put opacity to 0 to take it off. Same with the value area. I don't really care about this as much, so I put that to 0. It doesn't really matter to me because I'm looking for these bounce points. The next thing that I do is I also enable value high, value low. So I have value high, value low, and point of control all open. I have this extended. Same with the value high for the market profile. I change this to red because usually that's where people sell from. For the value low, same thing, extend. I change this to green. Point of control over here, I extend that as well. I leave it black. I just leave it as is because it's the only black line, so I know exactly what's what. So once I have that set up right there, that's pretty much what my indicator looks like. So it helps me identify bounce points. It doesn't necessarily mean when price gets here, you need to sell. What I look for is I look for bounces off these areas, right? Bounce off above, or I look for bounce, break and retest below. So for this specific indicator, I use this mainly for confluences. I don't use this for entry points. I just use it for confluences. And then I use my main chart to identify MPSv2s, in that direction. So those are my settings right there for the TPO. Again, I have one for the 1 minute. And this is one thing that you guys will see too. So a lot of times what you'll see here is you'll just see these, like the closest ones. What you have to do is zoom out on the 1 minute, like zoom all the way out and then refresh it or go back down here to reset the chart. Once you have that there, you'll have all the levels. And you can see here how price respects these levels, right? See how like the news happened right here? Came down, bounced off the point of control, bounced off the value low, and then it shot right back up. Same with this over here, right? See how price pushed up, bounced off the value high, and then it came back down to basically the point of control, which is right here. So again, I don't use this as entry points. I use it as confluences. I just try to look for bounces off them because you can see whenever price bounces off these areas, like for example, price bounced off here. I've been okay taking some buys from there, not necessarily buying from there, but I would have looked for some MPSv2s from the buys from the sell side or the buy side, depending on where the bounces happen. So like same with this right here, right? Got a bounce right here. If I turn on the momentum indicator, I can get the rejection and then possibly get off the engulfing. So there's like an engulfing candle right here. There's a V1 right here, engulfing, and then another engulfing. Like there's different opportunities here to get in. You don't have to get in right at this green bar, but you can get in at this V1 variation. You can get in at this engulfing, right? You can get in at this engulfing. It just gives you opportunities for your confluences to kind of line up with your entry. So this is the TPO indicator, time price opportunity, also known as market profile. This is what I use for my rejection points. So again, I have this on the 1 minute, I have it on the 30 minute, and then I have it on the 1 hour. So I just use all different time frames to identify bounce points. If I have a nice bounce point here on the 1 minute, and I also have a bounce point over here on the 30 minute, and then I also have a bounce point here on the 1 hour, then in a situation like that, I'm like, okay, I'm for sure going to look for sells, right? So if just using this as an example right here, there's no bounce points right now, but if we do get a bounce point off the value high right here, I'm gonna look at the 30 minute and I'm like, okay, perfect. This is also bouncing off the value high right here, right? And I go over to the 1 hour and I'm like, okay, I see the same thing, but if this ends up pushing up a little higher, it bounces off the value high right there too, then I'm gonna be more inclined to take a sell here, right? Because I got 3 confluences on 3 different time frames pointing towards a downwards push. So if I was to get something like that, that's what I'd use my confluences for. Like for example, if I get an MPSv2 setting up for a sell here, then I would take that because I have the confluences right here on the 1 minute, 30 minute, and 1 hour. So those are the confluences for market profile. That's just one of the things that I look at. The other thing that I look at here is volume profile. I don't necessarily use volume profile very much because it's not as accurate as market profile. It's okay, it does this job, but it's not as accurate. So like, here's the thing that I don't like about volume profile. If I zoom in, you'll see here that that these levels change. See how the levels just change right there? I don't like that, right? I don't like when it changes like that because it doesn't show me exactly like what's legit and what's not legit. So for me, I just zoom out and then I leave it as is. I don't touch it because now you have the actual value high and value low down here. The problem with the volume profile is that when you zoom in, it only takes into account the candles from here to whatever you have on your chart. So whatever you have on your chart, that's where the volume profile is going to plot. So in order to get like the biggest range, I just zoom out and I don't even zoom in at all because I want to have as many candles as possible on the chart, from all the way over here to over here to show me where the volume profile is. So for me, that's how I use volume profile. Again, you don't have to use this stuff. This is just confluence for me. So like I look for bounce points, just like I said earlier. So for example, right here, bounce right here. If I was to see a sell entry, like for example, engulfing right there, this is a reversal pattern, another engulfing right there, another engulfing right there. There's opportunities to take sells here, right? So I can take a sell at any of these points if I wanted. Sell right there, sell right there, sell down here, etc. Because I have the bounce points. And I use these all in confluence with each other. So I use volume profile, I use market profile on the 1 hour, market profile on the 30-minute, and then also market profile on the 1 minute, right? These are all different tools. So like when I use these tools here, I try to find as many confluences as possible, because if I'm getting a confluence on the 1 minute, 30-minute, 1 hour, and then also volume profile, that's like, it's a no-brainer. It's like, okay, take a sell here because you're getting rejection points on the top end on all time frames, or you're getting a rejection on the bottom end. So that's what I use here for the profiles. So market profile, I think, is way more useful than volume profile. The thing with the market profile is that I also have volume on here as well. So I have both, right? Except they're just a little different. So I use market profile for the rejections. I use volume profile just for another confluence. And then for this tab over here, this is my clean chart. So for this one, I don't really have anything. I don't know. Let me try to fix this. So this one updated for some reason, but I'm not able to take off the option isn't there to take off the opacity. Let me see. Oh, there we go. Yeah, that was weird. Okay, so with that said right here, this is basically a clean chart. This chart doesn't have anything on it. The only thing that I have here is I have the K2 MPS levels. I have this here and I have it set to whole numbers. So I have it set to every 50 points. Same thing that I use the market profile and volume profile for. For this one here, I basically look for bounce points off whole numbers. They're not for entries, not for entry specific, but I just use these here for bounce points, like I said earlier. So like, for example, price bounced off here, right? 42,500. If I get a sell entry somewhere around here, whether it be a reversal entry, like for example, rejection, and then I have an engulfing candle right here, or if I have momentum right there, so you have a sell signal, this is an MPSv2. That gives me the opportunity to take the entry right there. I don't take the entry based off the rejection, I take the entry off the confirmation. So I just use the bounces there for my confluence. Same with this here, right? Price bounces off this whole number right here, which is the 42,300. We get a buy signal here, price pushes back up. We have an MPSv2 that sets up right there. This is an MPSv2. Full TP right there, right? So that is, again, the same thing. I use the same thing here. It's just confluence. I look for the bounce points, but my entries are based off my main chart here, where I look for the actual entry points. So simple as that. That's the clean chart. I use full numbers. I have it set to the every 50 points. If you want to have it set to like the bigger numbers, like we'll say like 100, you can do that too. Like if you just want to focus on the big whole numbers, you can do that. For me personally, I'm looking for these bounce points. So I think 50 is good enough. These whole numbers, they do the job. And that's kind of where I leave it at. And lastly, the last thing that I use here is the support resistance. So technically this is usually blank like that, but I turn on the support or resistance indicator, K2SRV2. I usually go on the 1 hour time frame, and then I mark up these levels of support and resistance. So I just mark these levels up, and then I go back to the 1 minute and I leave it as is. So you can see how price respects these areas, right? So this morning I drew up these levels here. See how price went from the support to the resistance pushed up a little bit, turned into support. And then now we have the upper resistance right here. See how price respects these levels? Price came up to this resistance, came down. Again, I'm using this as a confluence. So when I see that bounce there, if I see any entries for a sell, I'm going to be looking to take entries at that point, right? I'll turn on I don't have the reversals on here. All right, so again here, same thing. I got the rejection off the 1 hour resistance level. We have an engulfing candle right here. I can take that for an entry. Engulfing right there, I can take that for an entry. Doesn't exactly matter. I mean, this just depends on where you want to take entry. V1, engulfing right there, I can take entry at that point. If I want to take an MPSv2, I got a sell signal right here, price pushed down, retraced, came back down right there. There's where my MPSv2 would have came up. So you guys can see, it kind of gives you a storyline. So I use all of these tools here to kind of give me a storyline. Like, okay, this is where I'm going to be looking for entries because I have the bounce off this point. Then I'm only going to look for sells. It doesn't matter what strategy you're using. You're just using these bounce points to identify your bias, right? If you got a bunch of bounce points on the top end, then you're going to look for sells. If you got a bunch of bounce points on the bottom end, you're going to look for some bias. It's easy as that. So if you guys have any more questions regarding, those confluences and stuff like that, feel free to hop into the chat. That's pretty much all I use, guys. Again, I use one for the trend to identify the overall trend. I have my main chart. I have a 1 minute market profile, 30-minute market profile, 1 hour market profile, 1 minute volume profile. You don't need all of these again. I might be a little overkill. For me, I like to know more than less. So I have all these charts open here. You don't have to have all these open. I mean, if you just have market profile, I think that could be good enough. But the more confluences, the better. So market profile, volume profile, clean chart with the whole number levels, and then my support resistance charts over here. And that's pretty much it. I mean, all this stuff here is it's just extra. I use the MPSv2s for my entry, but then I use these as confluences to decide whether I want to take the trade or not. So there goes my confluences right there. So the first thing I'm going to do here now is I'm going to go over to Shivan's question. So Shivan was basically asking, what do I look for when to avoid MPSv2s? The main things that I look for, or that I typically focus on, so things I look for to avoid entries, and there's only a very few. Red flags. So with red flags, that'll be sessions, session high lows, news price, and opening price. That's literally it. Those right there, and then incoming high impact news events. Avoid usually 10 minutes before and after. And that's pretty much it. I don't really look at too much there. I mainly look for reasons to take the entry, not reasons not to take the entry. The main things would be obviously the red flags. Obviously, the sessions are going to be like the biggest thing. News price, sometimes you can ignore it, especially if it's been tested a bunch of times. And then opening price. So if I was to put this in order, it would be like this. So it'd be sessions, opening price, and then news price. News price isn't as important. It just kind of depends on what the news is. If it's a really high impact news event, then yes, of course, we can avoid it. It's going to act like a magnet. But lower impact news events don't really matter as much. And then also if we have news coming up. So for example, like this morning, there was news at 7 o'clock. I know I was in the position, or 7:30. I knew I was in the position at 7:30. The only thing is that it was gas stock change. So like gas stock change doesn't usually affect the market very much. So most of the time, I'll try to avoid trades when we got a news event coming up. This is usually how I mark up the news. So if you have news right here at 7:30, I'm probably going to try to avoid entries between 7:20 and 7:40. The reason for that is because you usually get market manipulation before, right? You get the pre-news movement and then you get the after news movement where price reacts to the news event. Because this was a low impact news event, I didn't care about it as much. I was okay with taking the trade. But if it was something like, CPI data or anything that's a red folder, basically, like the news for today right here, it's all like pretty much it's low to medium gas stock change. It happens every Wednesday. So it's not like a big deal. But if you had something like the interest rates, obviously I would avoid that. Jobless claims, anything high impact red folder, usually avoid it, or even medium, but it depends on which one. So that's pretty much the only stuff that I try to avoid. Let's see, Shivam said, gotcha. Can we do a random day in January backtest for an actual live trading day? Yeah, of course. No, for sure. Let's do that. Okay, so he said random day on January 14th. Let's do that. I'm gonna go to, that's pretty far back. Let's see if I can even go. I'm pretty sure I should be able to go that far. I might just have to pull the reset button. All right, so we're gonna go over some examples right now for the MPSv2. And I'll look for some A++ setups for you guys as well. Let me turn off the reversals indicator. I think that kind of lags it a little bit. Yeah, I was about to do that, Siobhan, but I'm already like, here, let's see, I'm gonna go back to here. Let's just replay real quick. I'll go to the higher time frame and I'll go back a little bit. Yeah, I usually do that. I don't know why I try to go on the limit. I thought it would be faster to just zoom back, but all right, so Siobhan said January 14th. Oh, that's weird. Okay, there we go. Okay, so January 14th over here at 8 o'clock. 1 minute. Okay, so I'm just looking at the price action right now, Shabam. This looks like a day that I wouldn't really take any entries. You can kind of see here just by, just eyeballing the market for the day. This is kind of how it was yesterday, right? Like just by looking at the price action for today, I think this would be a day that we just wouldn't have any entries or we wouldn't take anything because this is going back and forth, but we'll still look at some opportunities here, right? It's just that if I draw so let's see. And this is good that you brought this up because days like this, days like this are going to be the days where you have to really know what you're doing, or you have to know when not to take certain trades, right? Because it looks like this is kind of the range. When we see market open right here, 6:30. Yeah, so let me go over here real quick. Turn on the reversals. So right here, basically, when market opened up at 6:30, the range would have been established because this was a 6:30 candle right here. It established the high and it established the low. So what I would have done here is I would have drawn this range up already. As soon as this here would have closed, we would have had the range marked up. But let's see if we could find some entries here. Regardless of the fact, we'll try to see if there's anything here that would provide opportunities for entry. So let's see, I'm gonna mark a line over here at 6:30 because this is when market opened up. So looking at this here, we have a sell signal that came up, price retraced up, never came back down for an MPSv2, so there's no entry here. Looking over here at this buy signal, we had a buy signal come up, price retraced down, came back up right here. This would be an MPSv2, but it's at the sessions, right? It's right at that purple line, which is the Asia high, so there would be no entry there. That's going to be a red flag. That's one that I would avoid. Now, price comes back down right here, pushes up a little bit, closes right here. Here's an example of an entry that we would have taken. So let me go over here real quick. Price came up. I was trying to look for, okay, so this is actually, this is an A++ setup, but it's also a, actually the A++ is going to be down here, but it would have been avoided because of the red flag. I'll show you guys right now. So we had the sellers in control right here, right? I'm going to replay to this specific bar. Okay, so looking at this right here, we have an MPSv2 setup, right? So with this right here, we have a sell signal, price retraced up on this green candle, and then we have the confirmation right here. This is an MPSv2 setup. Let me see if I have the criteria here for the MPSv2, which I should. Where is my templates at? There we go. All right, let's do this. So first step, identify direction of market. You can see the sellers are in control right here as price starts to push price down, pushed up a high. We had a high point right here. And then from here, price started coming down. We had the sell signal that confirmed the direction. So step one, identify current direction. You can see over here from market open, price was pushing up, so the buyers were in control. And then at this point right here, price started coming back down. It established a high right there. And we had a sell direction from this point. Price was pushing up, then it came back down. Here we have a sell direction, so we're only going to look for sells at this point. Step two, identify momentum in the direction of market. We have a sell momentum right here. Step 3, identify retracement against direction of momentum. So with that said, we had a sell momentum here, and then we had a green candle that followed right here, right next to it. That's going to be the retracement candle. For step 4, confirm, identify confirmation of continuation in direction of market. So again, we had the sell signal right here, right? So we wanted the candle to close below this black line, which it did. That's going to be step 4. Step 5, enter on the close of the continuation candle. This right here closed below the black line. So you can enter here for a short sell position. TP stop loss is set to 30.30. This is an MPSv2 setup. If you guys have any questions regarding this, feel free to ask away. But this is a pretty straight up entry. It's pretty much everything's perfect. This entry would have bounced around a little bit, and eventually right there on the second candle, full TP for an MPSv2. So there goes an MPSv2 entry for January 14th, just a random day. Let me go over here. There's a A++ setup that came up after, but I believe it was at a red flag. Yeah, so here's the A++ setup. So this is an A++ setup, and let me put them over here. Let me pull up the templates. And I really hate how TradingView always updates. Like for example, clicking on the text box right there, it's kind of hard to pull up the setup. So here are the A++ setups. So this is going to be scenario 3. So scenario 3 is first an MPSv2 comes up. So that's this entry, right? Second, we have a reversal continuation. We have an engulfing candle right here. And the third one is reversal continuation, which is right here. We have an engulfing candle, right? So we have 3, it's basically 3 back-to-back. So you're looking for an MPSv2 reversal continuation and then another reversal continuation. On the third one is where you take your entry. Right here, this would have been your entry if it wasn't at a red flag, but you can see over here that it obviously it's at a red flag, so it's not one that you would take. It's right at the New York high. So if this was an entry that you would have taken, you can see right there it would have pushed down and it would have hit TP. I'm just using this as an example, but because of the red flag, it would have been one that I would have avoided. But it's still a setup for an A++. So, all right, there goes an example right there. Let me see if I can find another one. Okay, here's another one right here. This is an A+, sorry, not A++. This is a, actually, this is an A+++, A++, and then it's also a MPSv2. Okay, so, all right, right here, this is an MPSv2. We have a buy signal right here. Price pushes up, retraces on this red candle. Then we have a confirmation candle right here. Price breaks and closes above this black line, which is the momentum signal. And that's going to be a setup for an MPSv2. This right here is also an A++ setup. So this is going to be scenario number 1, or it's going to be a little bit of a mix. You're going to have scenario number 1, and you're also going to have scenario number, I guess scenario number 2. So I explained how this is an MPSv2 setup. Now for an A++, we have an MPSv2 right here. We have a B1 variation plus engulfing, and then engulfing on this candle right here. So it's a lot of confluences in one right here. You got the price pushing up. Again, for scenario 1, reversal continuation, B1 engulfing. Number 2, engulfing right here, and then it's also an MPSv2. So looking at scenario 1, you're going to enter on the MPSv2 close. So this here would be an MPSv2 plus it's also an A++ setup. If you have something like this, it's probably going to hit. Like, you know, if you have so many confluences there, something like this is for sure going to set up as an A++. PC is asking, what is V1 engulfing? V1 is a V1 variation, engulfing is an engulfing candle. So they're 2 different reversal patterns. It's not one thing, it's 2 different things, PC. So it's a V1 and it's an engulfing. It's not V1 engulfing. Or if you want to call it a V1 engulfing, you can call that too. But they're 2 separate reversal patterns that line up on the same candle. So this is a V1 right here because this is a double body rejection. And then it's also engulfing because this candle engulfs this candle right here. They're just basic price action patterns. They're supposed to signify a reversal. So for example, if price pushes up, comes back down a little bit, and then you have that double body, that's a reversal pattern for a V1. And then engulfing just means that this candle is engulfing this one. They're both separate price action patterns. I mean, if you want to put them together, you can, but usually if they line up together, they're usually going to set up for a pretty nice entry, especially if it's a big candle. We're not a big candle, but big enough. So yeah, this right here is going to be a A++ setup. Let's see if this runs. And you can see right there, it blasts straight to TP with like pretty much no drawdown. So this was a pretty good day for like a random day that you chose, Shivam. There's some pretty good setups right here. And then you can see over here, the entry happened before the session. So it would have been okay to take because it doesn't push through. Let's see, PC's asking, does engulfing include the wick or just the main body? It's just the main body. I mean, some people do the whole candle, but for the most part, you're not going to see candles like that too often because most of the time it's just going to be the body, right? So let me see if I could find one over here. Yeah, like a lot of times it's just going to be the body, but if you do see one where it engulfs the entire candle, then that's an even better engulfing candle. But for the most part, the way that I use it is I look at mainly just the body. Because if you have a huge wick like that, like how you said, like say for example, this wick was like huge, right? Say we had like a big wick that was like super, super big, right? If you have a huge candle like that, I would probably just avoid it because it shows that there's like a lot of uncertainty with a candle like that. So for the most part, I don't necessarily look at those types of candles like, and you're not going to get those types of candles unless it's like a news candle, like something like this, right? Sometimes you'll have a candle that's huge like this, and it'll have like a small body and then a huge, huge wick on both ends, like a doji. But for the most part, I typically just look at the body. Same with the V1s. I look for double body rejection or double wick rejections, but not necessarily like huge bodies. As you can see over here, if you get, or not huge bodies, huge wicks. So if you get a big wick like that, usually it's going to bounce off or it's going to push the other way, which is good, but usually don't see that very often. All right, so there goes two of the entries right there for MPSv2 and A++. Let me see if there's another one here. Nothing right here, nothing right there. There's another one right here, it looks like. But I think this is where the market went sideways. I don't know if there was news. It seems like there was news right here at 7:30 because price kind of went sideways. Usually, if you start to see a consolidation phase like this around 7:30, it's because there's typically news that happen around there. Right, ended up kind of slowing down a little bit. So you can see the slowdown right here. And then it picks right back up over here. That's pretty much 8 o'clock. So there goes some setups right there for the MPSv2 and for the A++. If you guys have any more questions regarding that, feel free to hop into the chat right now. Let's see. Mike said, are they more likely to fail if the candle is opposite color of the trend indicator? Not so much. So I mean, yeah, they're going to be more likely to not hit if you're trading against the trend. So like typically I try to go in the direction of the trend, Mike. I mean, obviously I don't always do that, but like for the most part, these trades usually end up in the direction of the trend. So see how we have the sell entries right here? The trend meter is red, right? I didn't necessarily look at the trend meter. I don't, this would be another confluence, but I don't necessarily, like if it's not matching, I'm not going to skip the trade. But yeah, if you're going against the trade is usually not going to work out in your favor for the most part. I mean, I don't want to say usually, but a lot of times it's not going to work out in your favor. So same with this over here, right? We had a buy entry and the trend meter was green. The thing is, these trades are usually going to fall in the direction of, okay, so Mike actually means the momentum. So Mike is actually referring to an invalid momentum signal. If that's what you mean, right? Invalid momentum. So from my experience, I don't necessarily see that happen very much. A lot of times, if we have an invalid momentum like this, it's because the market volatility is kind of like all over the place, right? So like I zoomed out earlier when we first opened up this chart. So going back over here to 8 o'clock, remember how I said this market over here was kind of going back and forth? I can tell that on this specific day, we had a choppy market. So like what I mean by that is, so I know this is an invalid signal right here, right? There's actually a lot of invalid signals right here. This is why I can tell that like it didn't really affect the situation very much with our entries, because what I can see what was happening here is that, see how there's a huge wick down below? What I can see here is that this candle was actually a big red candle. So it was a big red body right here, but I can tell at the last second, this thing probably spiked up and then it ended up closing green, but the candle was actually red initially. Same with this one over here, right? So looking at this one right here, we have a big wick on top. So I can tell that this over here was probably a green candle. And then at the last second, it decided to reject off this session right here, and then it became red. Kind of similar to the next candle. So let's go over here again to the next one. There was one more here. And you can kind of see how violent these candles are moving, right? You look at the ATR, you can tell these candles were pretty heavy. Like they were spiking around all over the place. And then same with this one right here. See, like, see how there's a big wick on top? I can tell that before this candle closed, it was probably a big green candle. There's a big green body right here. And then at the last second, it just decided to push down super heavily. So from my experience, I don't think that that really has a big say in it. I think the trend does have a bigger say in it. Like, you know, the initial explanation, that would make more sense. But for the momentum signal here, not so much. This a lot of times just shows that like the market was very volatile at the time, and you can tell it's pretty obvious because the ATR was super high here. This is January 14th. Usually at the beginning of the year, the market's kind of slow because we're coming back from the new year. You know, the ATR is usually around like 20-25. But like, you've seen over the past couple of days or past couple of weeks, the ATR is actually a lot higher. It's like at 30, 40, 50 in some instances. And that's just extreme volatility for this time of the season. So yeah, I wouldn't be scared of that, Mike. I would look at your confluences, and then, you know, if the confluences don't line up, then yeah, of course I would skip it. But for the most part, I wouldn't be too scared about that. I would be scared of the sessions though. This is what I would be scared of, right? You get a bounce off the sessions. Like if the entry was on this candle, that'd be a big no for me. Hey, what's up, Brock? Afternoon. Yeah, no worries, Brock. Yeah, Brock says he doesn't have Discord right now. Oh, that's weird. Yeah. If you want the link, Brock, I can give you the link. Here, I'll just put this link over there if you want to hop in, Brock. Up to you. If you want to stay on the YouTube, that's up to you too. But there goes the Discord link right there, or the Zoom link. Let's see, question from Mike. Mike is asking, can you explain what ATR stands for? Higher the ATR, lower the TP stop loss. Yeah, sure. So looking at this right here, Mike, the ATR stands for average true range. So ATR, short for average true range. Default settings on this is 14 candles. You can change it to 7. So I change mine to 7 sometimes, but it doesn't make a big difference. So like basically the ATR stands for average true range. What it does is it gives you the average of the previous 14 candles or whatever you have your settings set to. So that means that it's going to give you the average of these candles right here. It means that it does a calculation for you basically where you can it calculates the average of these four. So it'll be like this candle move this much, this candle move this much, this candle move this much, etc. And then it puts that number together and it gives you the average. So what it means is this is like what the volatility is for this specific time period, right? So like it says, that's why we use this as a good identifier, because for our TP stop loss, you know, when you have something like this right here, you want to try to go like how the market's moving, right? So for example, if you're trying to get in and out of this position within like 1 or 2 minutes, you want to go at like whatever the average is. Like you're not going to go, you could go for a bigger target. Like if you really wanted to just go for like, you plan on holding this position for like 10 minutes or even an hour, you can go for the bigger target, right? But for us, we're scalping here. So we want to be in and out of the position within, a minute or 2 minutes. That's why a lot of our entries here, they hit within a minute or 2 minutes because we're taking our entries based off whatever the candle movement is per candle, like basically the average of the most recent movement. So the ATR right here shows 32. It means that each candle is moving an average of 32 points. Right, it's going to be a little higher, a little smaller sometimes. Like this one over here was about 32 points, maybe a little more. This over here was a little less. This over here was a little less. This was about 32. This was a little more. This was a little less. But the average is basically 32. So like what you're trying to do is you're trying to basically, you want to you want to predict how much the candle is going to move over the next couple minutes because it's going to give you a win or a loss, right? When you have a 32 average right there, and you're taking the trade for like say a 32 TP stop loss, your trade's going to hit TP or stop loss within the next couple minutes. That's just what it usually is. And if you have your confluences there and you have your strategy set up, that's all you need, right? You need one little push in your direction for it to hit your TP. And that's exactly what happens here, right? So like we have an entry here for an MPSv2, right? Our normal TP stop loss is around 30. The reason why I have it set at 30 is because the ATR is typically at 30 on average, right? It's around like 28, 30, 32. So I think 30 is like a good number where you don't have to make changes. But if you want to go exactly based off the ATR, this is something that Brock's kind of working on too, basing the TP stop loss off the ATR, you can change it to 32, and then this trade will push up. And you can see that 32 hits right there. So that's how I use the ATR as like basically my marker for where I should set my TP stop loss. Because I'm trying to get out of this position within a minute or two, right? I don't want to be sweating for like I don't want to be sweating on this position, holding on to it for like a couple, 5-10 minutes. I'm like, damn, this trade's pushing for so long and it hasn't hit my TP yet. What if it reverses on me? I'd rather just let that thing hit right away. Yeah, exactly, Mike. We're using the numbers to our advantage. A lot of people, like you'll see people have crazy targets, which is okay, right? You have people have targets like this that are like way up here. And that's cool. Like, some people like to trade that way. I don't like to trade that way. Like, I don't want to be stressed out for let's see, if we let this thing run, see how far we get up in profit. And look as it comes down. Or actually, it does hit right here. We'll make the target a little farther. Just use this as an example, right? Because you'll be like a lot of people like to trade this way, but this causes a lot of stress. Because the thing is, if you would have just gotten out and you would have set your proper contract size and you would have been out already, you'd be good, right? Within the first 2 minutes, you'd be like, okay, cool, I'm out of this position. But if you have your TP like way up here and you're holding on to this position for like, look at that. If you would have just took your profit, you would have been perfectly fine. But people's strategy is different. Like sometimes people like to do this. They like to have this type of setup. They're okay with losing every so often. Sometimes you're going to lose like maybe 3 or 4 times until you win, but then you end up at break even. This is usually what a lot of people like to teach, which is completely fine. If that's how you want to trade, so be it. But for me, I like to be in and out within like a few minutes. So that's why I base it off the ATR, right? Because if I have it based off the ATR, like for example, right here, see we have a sell signal. This is a pivot scalp entry. It's a different strategy, but my ATR right here is at 26, right? So see how my ATR is at 26? I can go for 26. Like if I don't feel comfortable and the volatility is low, then great, I'll go for 26. But the average here that I think price is going to go up to would be 30. So in a situation like this, I would just go for my set TP stop loss and be out. Now let's use this as an example. This is another pivot scalp entry. It's at a red flag, but it's a pivot scalp entry. See, if you want to go off the ATR, this is probably going to hit within 1 candle or 2, maybe. See, price pushes up and then it hits perfect, right? 25. If you're going for 30, you still would have hit it. But look, the ATR is at 25 right now. I'm not going to go for a 40 CP stop loss, right? If I go for a 40 CP, like say I just want to go for 40 because I'm like, oh, price is going to push. Instead of getting out at 25, now I'm screwed. I pretty much gave away profits when I could have just gotten out at 25 because the ATR was at 25 at the time. So it just depends on the person who's trading. For me personally, I've been trading for years now, and I've been using this. I know a lot of people don't like scalping. Most people don't like scalping because they don't know how to do it. Like for us, I've been trading for over 12 years now, but I've been scalping for about 8 years. Once you find a system that works, and for me, scalping is what it is, you can make pretty good money just taking one or two trades with like proper contract sizing and proper risk. And then you'll be in and out of the position within minutes, right? You don't have to be worried about, is this trade gonna hit the fan and then end up going reverse on me? Especially in this type of market, right? It's a very volatile market. I'd rather just be in and out. So yeah, Barack said, remember, there's also a trailing drawdown issue with Apex. Yeah, I agree with you too. There is a trailing drawdown issue. So like what happens sometimes is if you have a really big TP stop loss like that, let me see if I can find an example here. Okay, so this is actually a pretty good example right here. So we'll use this right here. So say you're using, decent contract size. All right, this isn't actually a really good example. Let me see if I can find a better one. Okay, so here's actually, I'm trying to show you an example of like how the trailing drawdown could really screw someone up. I guess this could be sort of an example. We'll just say that you entered like right here, and this has happened to me before, and this is why I stopped taking big targets. Okay, so say for example, right here you have, and it hits, right? So I just want to use this as an example to show you that the trade does hit. But if you have a trailing drawdown in place, and then like trailing drawdown with Apex, you can be in profit right here about like 50 points. But because price ends up retracing up 50 points, if you hit your trailing drawdown, like say for example, you're trading, we'll just use like a crazy number, like 30 contracts. So 30 contracts times 5 times 50. Okay, this is where you get super, super screwed. Because see, the thing is, you'll be in profit 7,500, but your trailing drawdown, when it starts to retrace, you end up going to draw down about the 50 points, right? So if you go in a drawdown 50 points right here, what happens is even though you're in profit, you still blow the account. So that's why like I personally don't, and this is kind of an extreme example, but it happens. It happened to me too. Before I was trying to go for 100 points each way, but then I actually got stopped out and I was in profit. It was so annoying because I was like, man, I can't believe I was in profit like 7,500. Instead of taking profit down here, I wanted to go to pass because obviously I was going for that 20,000 mark. But it retraced here and I ended up blowing the account. Well, I didn't blow the account, but they violated the rule. So you just got to keep that in mind, guys, as well. If you're trading with Apex, scalping is your best friend. If you're trading with Apex, scalping is your best friend because you're going to be in and out of the positions quickly. You're not going to get eaten up by trailing drawdown. If you're trading with a different platform that allows for trailing drawdown or has an end of day trailing drawdown, then perfect. If that's the case, then you can let it run. But for the most part, if you're trading with Apex, you should get out of the position as quickly as possible so that you can reap the benefits of the profit and not get caught in the drawdown. Yeah, exactly. Barack said, imagine going 3,000 in profit and it closes at 1,000. That's 4K of your daily drop. Yeah, exactly. Your limit. You still would like be trapped in the position if that was the case. Let me scroll up. I just want to make sure I didn't miss any of the questions before I continue to answer. Oh, see, I see your question there. So I will, and I see Vapid's question. I see your question too, Ark. I'm gonna save yours for the end because yours is a pretty long question. Let's see, I'm going to answer Vapid's questions first. So Vapid is asking, can you explain the difference between Rhythmic, Trade and wealth charts? I'm probably going to do an Apex eval, don't know which one to pick. So it depends on like where you plan on trading, Nick. Do you plan on trading on TradingView? So if you want to trade on TradingView directly, like on this platform, then you'd have to choose Trade. If you use any of the Rhythmic platform, I personally wouldn't use Rhythmic because they always have disconnection issues. I used Rhythmic initially with Top Step, and it was impossible to get logged in. So I personally would just stay away from Rhythmic unless you're using Quant Tower. So Quant Tower is a platform that you could trade on. If you're using Rhythmic, a lot more prop firms use Rhythmic, and you can connect them all through Quant Tower. If you're using NinjaTrader, you can only have one Rhythmic account, which is it's kind of annoying. It's dumb. It's you have to. It's like a third party thing. So let me just kind of show you here. So if you trade on Trade, you can trade with um directly on TradingView on NinjaTrader platform, Trade web platform, and NinjaTrader web platform. So you have a lot more options when you trade with Trade. I personally use this option. Let's see, Rhythmic option. You can trade with, so like you can trade one account link on NinjaTrader directly on Rhythmic or Quant Tower or Sierra platform. So here's the annoying thing, and I'll show you real quick. So I can't say anything for Quant Tower or Sierra because I don't use them. But if you want to trade on NinjaTrader, it's super annoying. So like to trade Rhythmic on NinjaTrader, first log into Rhythmic separate platform, then 2 link to NinjaTrader, then 3 log into NinjaTrader, and then 4 attach account to NinjaTrader to load up. So there's like so many steps here if you want to trade Rhythmic on NinjaTrader, and you can only have one. This is super annoying because so here's a problem if you do this. This is what happened with me. I blew the account because what happened was I was logged in. You have to log into Rhythmic first, right? And then you log into NinjaTrader. So what happened was I did all this, and then when I was trading on NinjaTrader, I lost connection through the Rhythmic platform. So I was stuck on NinjaTrader, but I couldn't log back in. So I was like in profit, it hit my TP, and then I had a connection issue, and then there was no way for me to get in, and I ended up blowing the account because you have to go through loops and holes to basically trade on NinjaTrader with Rhythmic. So unless you're using Quant Tower or Sierra, then I would go with Rhythmic. But if you want to trade on NinjaTrader, I would go with Trade because you have all these options here. And the cool thing with this is that if your trading view screws up, you can go on NinjaTrader. If your trading view, if your NinjaTrader screws up, you can go on Trade. Like you can just go onto these other platforms to close out your position. With Rhythmic, you're kind of screwed because if you have a connection issue, then good luck. Hopefully your position is in profit and it's not in drawdown because it's going to be almost impossible to get out of it. So that's the Rhythmic option. And then the wealth charts option that you mentioned, that's new. I personally, I think wealth charts is own trading platform. I think wealth charts is probably the you have like the least flexibility because you can only trade on wealth charts. So I would not use wealth charts unless you want to trade on wealth charts. These are 2 good options. For me personally, I'd say Trade I know it's a little more. I think it's like $10 more, $20 more. The reason why they do that is because you have so many options. You can go on TradingView. Like for example, see how it says TradeAvate down here? I'm logged into my Apex right now. So if I wanted to take a trade, if I wanted to take, a buy entry, I could trade directly on here. So yeah, I would go with TradeAvate option versus any of these other options. But if you're familiar with Quantower or Sierra, then go with Rhythmic. Let's go out real quick. Barack says, Sean, I need to reach out to you after the live. It's about the consolidated. You had a strategy on. Super distracted on here by his daughters. Yeah, no problem, Barack. Feel free to hit me up. Okay, Vapid said, what's the trailing drawdown max on Apex? Your trailing drawdown max depends on your specific account size. So for me, I only have 300K accounts, so I don't know what the trailing drawdown is on other accounts. But for Apex 300K accounts, drawdown is 7,500. So for me, I use 10 contracts. My risk per trade is do the math for you real quick. So 10 contracts times 5 times 30 is 1,500. So the trailing drawdown is 7,500 on 300K counts. Unless you're like over it. Once you're funded, you'll have like an excess amount. But if you're on eval or if you haven't reached the threshold yet, you're going to be set at like 7,500. So this means that, right? I mean, it's not going to make sense here because it depends on your contract size. But this means like we'll just use this as an example. And we'll say that this middle point is going to be your threshold. So you can never really go back 7,500. So say, for example, this is your threshold right here. If you make it down to 7,500, and say, for example, you don't close out of your position, right? And it goes back to your break even, you're going to be at this point, you will be in 7,000 drawdown, even though you're at break even. Does that make sense? So like at this point right here, this is what sucks about the trailing drawdown is that you'll be at 7,500 in profit, but if it goes back at all, any drawdown, it's going to eat into your trailing drawdown. So this is why it's important that you close out of your position if you're taking a big size like that. If you're taking like one contract or like a few contracts, that's completely fine. You're not going to run into problems. But for this one specifically, just for example purposes, this is how the trailing drawdown would work. So you would have 7,500 on a 300K account, depending on your account size. Let me open Apex. I don't know what account sizes you're using, Vapid, but depending on your account size, it's going to vary. So let's see. Yeah, the TradeAvate plans over here. Well, depending on which one you do. So like the lower the account size, the closer you'll be within your trailing drawdown. But you can see over here on the 300K, it's 7,500, 250K, it's 6,500. If you do a 50K, it's going to be pretty much even. Like you can probably pass a 50K or a 25K. Like for 25K, it's 1,500. You can basically pass a 25K with like one trade. Like if you wanted to take an MPSv2, you can go basically max out your contracts and then pass it in one trade. Say the 50K over here, it kind of changes a little bit. It goes from 3,000 to 250. And then as you go higher, it starts to get smaller and smaller. This is 3,000 for 100K, 5,000. And what I mean smaller is the spread between the profit goal and the trailing drawdown. So kind of depends on your account size, but for the most part, that is where it'd be set at. Oh, gotcha, CJ. Yeah, my bad. So let me answer CJ's question real quick. So CJ, let's see. Your question over here was, hey Sean, can you go over how the liquidity gap indicator can help us pinpoint better entries? You mentioned it quickly on the live. Yes. So let us do that real quick. So yeah, but if you have any more questions regarding that, feel free to hop in the chat and ask away. Otherwise, I'm going to go over this real quick with CJ. So CJ, the way that I would pinpoint entries using the liquidity is on the 1 minute chart, I would use a 5 minute liquidity because it's like not as noisy. And I would kind of pinpoint where it lines up with the market profile. So see right here, we're currently at the point of control. I would turn on the 5 minute and see how like we have a liquidity gap right here, or like basically a liquidity zone. What I would look for is I would look for the bounce off here, and then I look for an entry for a buy, right? I would use this as an extra confluence. For the 30 minute and the 1 hour, I would just use it as chart. I wouldn't use a 5 minute, of course, because we're on a higher time frame. So I would just leave it set to chart. And then I would do the same thing here. So see this right here? Oh crap, wrong button. So see this right here? See how we have a value low right here, CJ? So we got the value low right there. When I turn on the liquidity, see how we have a gap right here, or a basic liquidity gap? For this right here, since these two line up together, if I see a bounce off this point, this is going to be a good confluence for me, right? Because I'm looking for this here to bounce off the value low. But if it bounces off the value low, this green line, it also bounces off the liquidity right there, right? So that's what I use. This is what I use here for this. So I would look for the bounce off the value low and also bounce off liquidity. Same thing with the 1 hour. So if you go on the 1 hour, same thing. I would just leave it at chart. And then same thing right here, right? So see how the liquidity zone is right here, this bright green box. It lines up with the point of control, right? This black line right here. So what I would look for is I would look for it to bounce off that point, and then I'd look for some buy entries that are in this direction from there. And you can use this for a lot of things. You don't have to use it with market profile, but I think market profile is probably your best thing to use it with because you have some strong zones there. If you want to use it with volume profile, same thing. Right? If it lines up with the zone down here, then okay, look for that bounce. Or if you're using a clean chart here, same thing here as well, right? Okay, so this is perfect. See how we have the whole number right here, CJ? It's at 42,400. So I would look for price to push up, bounce off that point, and then look for a sell entry in this direction. So pretty straightforward, but I mean, that's kind of how I would use it. The thing that you want to be careful for is using the liquidity by itself, right? I don't like using the liquidity by itself because this doesn't necessarily mean it's going to for sure bounce off this area. So for example, if price comes down here, this doesn't mean it's going to bounce like that, right? This can easily push right through, and then come down here and bounce off this one right here. Because this is where it kind of lines up with this area, the zone lines up with this whole number down here. So that is that's how I use it. I mean, again, it's a confluence. It's not a specific strategy. Like I'm not going to take entries just because these line up, right? Like I'm not going to have a pending buy limit just hanging out right here, chilling. Like, hey, fill me, and hopefully come up and hit my TP. I'm going to look for that as a confluence for the bounce, and then I'm going to look for some sort of opportunity or entry to line up with it. Same, like right here, it's bouncing off the point, or it was bouncing off the zone down here. Bounce off the point of control. And see, we have a buy signal currently pending right there. Like if I was to see something come up here like an MPSv2, then okay, great. I see the bounce right there. And then I got the setup for the MPSv2. And then I would take that and then basically write it up to the value high over there. Yeah, no problem, CJ. If there's any other questions, feel free to hop in. Sorry, it took a while. I know there's a lot of questions, so they just keep piling up. But hopefully that answers what you need with that there. No problem, CJ. All right, let me scroll back up. And let me see what else we got here. Yeah, no problem, CJ. We'll see you back here tomorrow. Let's see. Let's scroll down real quick. All right, question over here from Shivam. So Shivam said, Sean, quick one. Do you have the copier open on Ninja and do it through TradingView? As I found that works. Curious. Also, I think I'm gonna cut out auto trailing as I've hit 100 live accounts after FOMC. Oh, nice. Yeah, no, for sure, Shivam. So I do have the copier open on Ninja, and then I also execute my trades on Ninja. The reason why I do that is because I trade on my personal account. So I think I posted a video more recently. Let me see. I think I posted it on where's the trade of the week over here? Yeah. So in this video, I pretty much showed how I execute the trade. Yeah, so you can see over here, this is kind of how my setup is right here. I have it, this is my personal account. This is like my actual live money account. I take 10 contracts on it. This is how I enter my trade. It shows up on my trading view, but that's because my Apex is copying. So like my entry will happen here and I'll do all my adjustments on here, but it'll also copy on my Apex. And then what shows on my trading view over here is my Apex account. So I'm not executing on Apex, it's just copying what my main account does. And that's what I do. You can do it the other way. Like, so the way that you mentioned that also works. Like if you want to trade on Apex, then you can trade on here and just have your copier open on Ninja and it'll still work. So like if your Apex account is your main account, so say for example, Apex is the one that is your leader account, right? And then you have all these accounts that are copying. If you were to execute trades here on TradingView, then your copier will still activate because whatever your main account does, the copier would be like, okay, Shivam, you entered this on your leader, so you want your copiers to copy it. So you can do that. That's one way of doing it. I actually did that when I was on vacation, and it kind of gave me like a heart attack because I was like, oh crap, I didn't realize that it was going to copy over to all the other accounts because I thought it was only TradingView, but it copied over to all my copiers. So that was like a scare for me. So I don't do that anymore. I just do everything directly through NinjaTrader so that I can have access to it. That's why like for here, this is how my whole setup is. So what I do is I'll enter the trade and you'll see me over here too. So look, in this video here, you can see I'm in the position, it's running in profit. And then look what I do here after I'm out of the position. So it comes over here and it hits, right? As soon as it hits right here, so I'll go back over here. So see how as soon as it hits, I'm like on the flatten all button. I hit this button like 20 times because I want to make sure everything is out. So see right there, I hit flatten all. And then see how all my profits start to populate over here. I clicked it again and it starts to close out more. And then I click it again, I think. And then all of them are populated. So this is usually how I'll do it. And these are all the personal accounts. So you can see none of them say Apex. They all are live accounts right here. These are like real money accounts. And that's kind of how I do it. I'll enter on here and then I'll flatten all to make sure everything is closed out. And then if this doesn't work, then I log into the account directly. I've only had to do that once, thankfully, but that's my whole setup. Yeah, exactly. It's only if your Ninja's open. If your Ninja's closed, then it's not going to copy. So if you have your copier active, make sure that you're not entering your trades in other places, or else it'll copy to all the accounts. Yeah, I know, it's scary. It is super, super trippy. Let's see, question from PC. PC is asking, why are you not using Tradeify? Unlike Apex, I am using Tradeify. I'm using all of them. So I have more than 20 accounts here. So like they're not all Apex. There's like 60 accounts here. 20 of these. So you can see all the ones that are 900. That's all Apex. There's 20 accounts there that got 900 profit. And then I have 7 Tradeify right here. I have a Perdia and I have a Take Profit Trader. So I am on Tradeify. That's my number 2 one. And I'm straight to funded on those. So yeah, I'm on Apex. So I'll put it over here. So I have accounts I trade. 1 personal live funds, leader execution account. That's what I do all my trades on. I have I don't know, 20 or 30, I think 30 hedge fund client live funds accounts. I have 20 Apex PA accounts. I have 7 Tradeify straight to funded. I have 1 Perdia straight to funded, and I have 1 Take Profit Trader. Still on the eval phase because I just opened it like last week. So yeah, I have all of these right here. Let's see. PC said, okay, would you recommend Tradeify over Apex? That's a hard one. So the thing is, you can make more money with Apex because you can have 20 accounts. With Tradeify, I have 7 because I'm grandfathered in. I already had these funded accounts from last year. You can only get 5 now. So it's kind of a double-edged sword. I mean, if you just want to get straight to funded and just get right into it, okay, yeah, Tradeify, go ahead. But so here's the difference, okay? So like I'm making about 1,000 per account, right? So obviously 1,000 times 20, I can make 28,000 with Apex. Once you're funded, perfect, no eval, you don't have to deal with it. But here's a problem with Tradeify. I mean, there's no problem with it, but you're gonna make less profit, of course, right? You only have 7 accounts, or you're gonna have 5 accounts, so 5 times 1,000. You know, if I'm gonna choose between 20,000 and 5,000, I'm gonna choose 20,000, right? So it kind of depends on like in your situation, PC. I would go if you just want to get straight to funded, get payouts, and you don't care about like multiplying right now, then go with Tradeify, 100%. The only thing with Tradeify too is that you're capped. So I think for your first 3 to 6 payouts, I think you're capped at like I want to say 3,000, right? So 3,000 times 5. That's kind of where you're capped at. You'd make about like 15,000 per payout. Versus Apex, you're also capped, but you're capped at 7,500, I think. So 20 times 7,500. So you're basically getting 100,000 more in a sense. So yeah, there's pros and cons to both of them. You know, depending on like if you can hit like if you don't need the money, like for me, I don't need the money, right? I've already saved up money from my trading last year and the previous years. So I can like pretty much milk well, if I was to start over and I needed to do an eval, I could live for like 3 months and pass all my Apex accounts and then get payouts after and then start making a lot more money. But if you want to get paid right away, then yeah, Tradeify would probably be, you know, best option. It costs a little more, but realistically, if you do the math, it's gonna cost about the same. So yeah, the situation is different. If you're looking to make money right away, go Tradeify. If you can kind of hang out for like maybe 2 or 3 months and not get payouts, then I would go with Apex. Let's see, PC's asking, can you copy trades on Tradeify with Apex being the leader? Yeah, I believe so. That's what I used to do before. I never got in any issues with them. You just got to show them that it's your account if they do ask. Like it has to be your account. It can't be you know, like another person's account. So yeah, for me, I trade directly on my main account, which is this one. That's you can tell it's a real account, like a main account, because it doesn't say Apex, it doesn't say Tradeify or any of that stuff. This is my main personal money account, and then it copies to all of my hedge fund clients, and then Apex, and then Tradeify, and whatever. But yeah, it's about like 60 accounts here. You guys can see it's a lot of accounts. Yeah, no, it's perfect. I mean, I would go with Tradeify. If I was to start over and like say for example, say for whatever reason I needed to make money like tomorrow, or not tomorrow, I needed to make money by next month. I would go, so the order I would take, order to open my accounts is I would do either Tradeify or Perdia, one of these two. Probably Tradeify because it's cheaper. I would do Tradeify, get those funded, get my payouts, do a Perdia because this is straight to funded too. And then I would go to Apex and then get those once you have money coming in from these accounts, and then take profit later because that's another eval. So that's like the order I would do it in. Tradeify, Perdia, Apex. Perdia only gives you one account, so it kind of sucks, but whatever, it's like free money. So Tradeify, Perdia, Apex, then take profit. That's currently where I'm at right now. And then obviously I have my personal account, so I'm making like 1,000 per day on this account as well, which is like my own money. Maria's asking if I'm still using Replicano. Yes, I am. I'm still using Replicano, and this is Replicano right here. That's where I'm copying all of my trades. Do it all through Replicano. Okay, let's see if there's any more questions here. Yeah, Shivam said he needs to get in the habit of flattening out as a safety net. Yes, because so what happens sometimes, Shivam, is like, so for example, I didn't always flatten out. Like for the breakout, I would never flatten out because it's such a big move. But what happened one time was I didn't hit flatten out, and then like I had one account that was still running, and I was like, what the heck? Why is the number still changing, right? Because you can see the numbers here are flat. Like once I'm done with the trade, the numbers aren't moving anymore. But I had one account where the numbers were still moving, and I was like, what the hell? That's weird. And then I was like, oh, flat and all, and then I closed out of it because I was still in the position. So yeah, it's always safe. I would do that just as a precaution, even if you know the trades are all closed out. I would just do it to be sure, because the last thing you want to do is you pull up your computer later and you're like, oh, what the hell? Like one of my accounts is blown because it didn't close out. All right, let me scroll up real quick. Scroll down. Okay, question from PC. So PC said, my problem is I trade on my phone since I'm at my office, so difficult to scale up. Is mobile copier available? So there's no mobile copier available that I know of. There's one that's kind of floating around. I think my funded futures they've been promoting it, but I don't trust it. So I wouldn't recommend doing one that's on the on the cloud, because so here's the thing. The problem with your account being on the cloud is that if you have any sort of connection issue, like what I was just talking about right now with Shivam, if you ever have a connection issue, you can't close it out because your account's like it's locked into the cloud. So there's one option, but I wouldn't recommend it, at least not right now, because they're like still a new company. I think they're in beta phase right now. So they're not really like proven yet. So I wouldn't use them. But I'm pretty sure within this year, there's probably going to be some more cloud options that are actually working. So yeah, unfortunately, there's no option right now. If there was, I would be using them too. But as of now, not yet. Yeah, and when I find one, I'll let you know. But there's one that's currently being used, and I don't think it's a good one. So I'm not going to recommend anything to you guys that I wouldn't use myself. So yeah, if anything new comes up, I'll let you guys know. But all right, guys, I don't see any other questions here. If I missed your question, go ahead and put it back in the chat. If you guys have anything else you want me to cover, feel free to hop into the chat. Looks like I answered pretty much. Oh, my bad. We have art. So yeah, for my bad, art. Your question was kind of long, so let me get to it. So I just want to make sure you're still here, Art. Are you still here? I want to make sure you can hear this. Here's your question. I'm gonna break it down a little bit. Okay, perfect. All right, you're here. So I'm just gonna break this down so that I can answer it properly. Okay, so here is. All right, so let's see what your question is right here, Arc. So Arc said, hello, Sean, I'll be in session. Got some follow-up questions. So number one, if the starting stop loss is larger than most of the potential profits, What's the worst that can happen if it breaks the pending order, then reverses? Like, when does the automatic trailing trigger? It should get us in break even or a minimum profit, right? So for the micro scalp strategy, the worst that can happen is that it's going to hit your stop loss, right? That's going to be the worst that can happen. That's the only thing that can happen. So you shouldn't have your stop loss super far out. I mean, you should have it like close enough, but not super far out where it's going to blow your account. The trailing stop loss only activates once you make profit. Like once you go like 1 point in profit, then you should be good. If you look over here, so I'll just show you a couple examples. So like, for example, right here, RX. So, and this is not a good example. Let's go back to some place where the volatility was a little higher. Okay, so like right here during like lunchtime. So your entry would have happened, would have pulled back right here, and your entry would have actually filled right here. See how like whenever it goes into profit arc, it already goes into profit like almost immediately, right? So you should almost always be at break even. But this thing right here moved up like 26 points. I mean, the worst that can happen is if your stop loss is, because what happens is you don't have a TP, but your stop loss is still like where it should be, right? It should be at like around 30. So most of the time you're gonna end up at like maybe a few points profit or break even. Most of the time it's not gonna hit your stop loss because it's like you'll see here, as long as you're following the directions and you're doing things properly, you're not gonna have it where it's gonna bounce off anything, right? The only time it'll bounce off anything is if you're trading around a red flag. So for example, if you're trading over here where the sessions are at, you shouldn't be trading there either way. See how price bounces off these sessions? You should never be entering trades at the session. So like that scenario that you mentioned it'll probably happen 1 out of like 100, if not more times. So like at that point, you should have profits locked in already. See that type of situation where you mentioned where it fills and it bounces off, it's usually going to be where the sessions are at. But you shouldn't be trading around those areas anyways. Otherwise, see how we have a buy signal here? It'll kind of bounce around a bit, but it's always going to push in profit at least 1 point. So you should almost always get out at break even or some profit. So the worst thing that can happen is it can hit your stop loss, but most of the time it's not going to hit your stop loss. It's probably going to hit you out at break even, or it's going to hit you out at minimal profit, maybe like a few points, depending on where you're setting your TP at or your trailing stop at. The session is the session high low. It's the indicator. It shows there's lines on the chart. Like basically any of these lines over here that go from left to right that are dotted, you're not going to take any trades around those areas. Like you should already be looking for that. You can see over here, like whenever price gets near these areas, that's where price bounces directly off of, right? So I mean, you should be aware of the sessions there. You would need the indicator to see it. So that's why like it's going to be important that you have the indicators, because if you don't have indicators, you're not going to know where not to trade. So see how we have a buy signal right here? Your entry would have happened somewhere over here. Actually would have never filled because price would have retraced. Your pending order would be right there, no fill. Pending order right there, no fill. Pending order right there, no fill. No fill, and then it went the opposite way right here. So at this point, price would have been going down, no fill, no fill. Buy signal right here, retrace. And you almost always go into profit at least 1 point. Like the scenario that you mentioned where it goes complete opposite as soon as it fills, that almost never happens as long as you're trading in an area where like for example right here there's a sell signal, right? So you start looking for a micro scalp right here. Price pushes down, retraces, your entry would be waiting right here, then it'd be waiting right here. It's going to push down at least a point because your auto trailing stop loss will trigger at about 1 point. The problem is you're going to have a lot of break-even days. Well, for example, right here, this is going to be a big move. So you're probably going to lock in at least a couple points. You'll have break-even every so often, but for the most part, you're usually going to be making some profit or, break even for the most part. So let's go to your next question. Yeah, the key thing is that you have to always have your trailing stop pretty much ready to go. Like you don't want to do anything by hand, because if you're doing it by hand, we talked about this in our mentoring session. It's only going to take one mistake for you to screw it up. So if you have the trailing stop in place, it's going to prevent you from screwing up because you're not going to, once you're in the position, it's going to do all the work for you. Let's see. So your next part of your question here is like, when does the automatic trailing stop loss? Yeah, it should always get you at break even. So it pushes at least 1 point in profit. Your stop loss would get moved in. So let me just show you an example right here. Just say, for example, you're entering like right here, right? We'll just use this as an example. So as soon as it goes into profit right here, it's your stop loss is like boom, right into profit or right into break even. So if you're in a position right here, this probably would have stopped you at a break even. You probably would have to pay commissions and fees, but it's better to have a small little loss versus having, a full stop loss. So as long as your trailing stop is set up properly, you should have no problem. It should almost always get you out at break even, small profit or big profit. Just kind of depends on how the volatility is during that time. Ark is asking, is there a setting for the trailing stop loss? Yeah, didn't I send it to you? I think I sent it to you, no? Let's see, Ark. Yeah, I sent it to you right here. There's the settings for your trailing stop. So let's go back to our chat there, and then you have it set up right there. So basically all this stuff right here will be set to 1. So this means that if you have all these set to 1, then every time it moves up in profit by 1 point, it's going to move your stop loss in profit. So every time it moves up just 1 point, your stop loss is going to get moved to break even, and then it's going to keep following it as price goes up any higher. Let's see, do you keep our finger on the close button? So no, don't touch anything. Once you're in the position arc, let the copier do what it needs to do. Because if you start to control things with the micro scalp, that's where you're gonna start to mess up a lot because you're gonna close too early, or you're gonna close too late. You just gotta let the trailing stop do what it needs to do, because that's what it's used for, right? It's meant to take out the thinking process, and you just need to set up the entry, and then the trade will pretty much run into profit as it moves up. Let's see, Ark said, and do a 10 mini on a 300K evaluation. Yeah, I mean, you could do that. You could do 10. So if you want to do 10, your profit pool is going to be 20,000, right? So divided by 20,000 divided by 5 divided by 10. So you basically need to get 400 points. So every day, your goal would probably be to make 20 to 25 to 100 points, which you can do with maybe a few trades. Or if you want to trade all day one day, you can do that and probably try to pass it within a day, but you need 400 points to pass. So if you think about that, so 400 points divided by, say, 10, you're going to go for 10 points per trade. You basically need 40 trades there. If you go for anything higher, 40 divided by 20, you need 20 trades. So you'll need between 20 to 40 trades to pass your eval. I know it looks like a lot, but you're doing micro scalps, so it shouldn't take that long. You're going to be taking 20 to 50 trades a day anyways. So as long as you hit those profits, you should be good. Let's see, your other question over here, you said for a 300K Apex, what contract size do I recommend? I mean, you can go pretty high. I would probably keep it between 10 and 15, around there. All right, if you feel really comfortable and you feel really good, volatility is high, then you can go for 15. Because if you do 15, you can actually pass a lot faster, right? From 20,000, but don't do 15. Okay, I'm just gonna tell you 10 now, because I know if I say 15, you're gonna do 15. So don't do 15. I don't want you to blow your account on your first day. Yeah, 10 should be fine. So start off with 10, and then if you want to increase that to 11, 12, 13, 14, 15, then okay, do it progressively. Don't do it right away. Because the last thing I want to hear from you is you're going to be in my DM telling me you blew your account. If you do 10, you should be fine. You should have no problem, because 10 times 5 times 30, Yeah, your risk is gonna be 1,500 for the day. If you have a couple wins, you're gonna make this much versus losing it. So start off with 10 contracts, and then from there you can increase along the way. Yeah, and then Ark said, but you recommend not to trade all day because of no volume. Yeah, exactly. So if you really want to make your money really quickly, Ark, your best time to trade is gonna be right on open. So probably within the first 30 minutes. See all this volume right here? So market opened up at 6:30, right? See all this volume right here, Ark? I'm gonna uh color it in. So check this out. So between 6:30 right here up until 7 o'clock, right? The first 3 minutes of market, you see all this volume right here, you can cash how many entries here? Like price pushed up. If you want to just keep, tagging it in. So for example, price pushed up, red candle right there, first win. Retracing right there, second win. You trail it right here, try to fill it, break even right there. Another win right there. You follow it down, another win right there. So I'm gonna count these real quick, Art, so I can kind of just give you an idea of what to expect. This is if you're hitting every single retracement. So 1, 2, 3, 4, 5, 6. Basically 5 or 6 entries right there. So if you were to hit all those entries right there, 5 or 6, and I mean, I guess we do the math real quick. So if you did like 5 entries times, we'll keep it pretty conservative. We'll say like 10 points. You'd be 50 points right there. So it's going to take some time, right? Because you're aiming for about 400 points. So it's going to take maybe a week or a couple weeks for you to get to that goal. So if you increase the contract size, you can probably pass it quicker. But like I said, the volatility here is like within the first 30 minutes. So first 30 minutes, you should probably try to knock those out, get your entries in, and then just wrap it up for the day. Come back the next day, do it again. But you can see the volatility here, it kind of dies out for a bit, and then it kind of picks back up again over here in the afternoon. Or I guess not afternoon, but like later morning. Right here after 11. So that's the goal, Art. If you can do that every day, lock in like 5 to 10 entries. I mean, if you're consistent and you don't screw anything up, I think you should be good within like the end of within a month's time. Because if you do the math, like really, if you do 50 contracts and you need 50 points and you need 400 points divided by 50, you really just need 8 trading days, right? You just got to do the math. The math right there, that's 8 solid trading days and you're good. That's basically a week, 2 weeks time. So you got to stick to the game plan and I think you should be good. But, like I said, don't touch it. Once you're in that position, let the trade kind of breathe and pull you out when it pulls you out. But yeah, the math right there kind of shows that you can probably get this done within maybe 2 or 3 weeks. A month tops, probably. Yeah, no, I know you'll get it done, Art, because I know you're motivated and you already got a game plan set up for yourself. Let's see, Art said for number 3, could we scalp our way to a 20K target with 2K per day? Yeah, 100%. You're probably gonna make more than 1 or 2K per day though. Because if you remember before, I don't know if I can look it up over here. Yeah, so like Shivam over here, he took the micro scalps and look at his profits. He killed it. 30,000 for that day, 43,000 for that day, 10,000, 8,000, 5,000. You're probably gonna make more than 1,000, Arc. I think you're gonna make more than that easily. I mean, I don't want to get your hopes up too high, but it's possible. Like this isn't even my profits; these are Shavam's profits. That's how much he did in one day, micro scalps. So I don't want to get you too excited, but just want to show you that it's possible. I think he was taking a 10 contract size, or I'm not sure, something like that. But I think he was taking a lot of entries though. So okay, and then number 4 over here, you're asking defensively, what could we do to assist making sure we don't get a big loss? The main thing you could do is just have your stop loss in place. All right, like I said, you just gotta let it breathe. Because if you start to put too much control into it, you're not gonna let the trade play out, and then you're gonna end up at break even almost every time, or you're gonna end up with a small loss when price is gonna swing back up. So when those losses happen, just eat the loss, take it on the chin and then wait for the next one. Or if you take a loss, then I will probably just wrap it up for the day. I think that's probably what you should do. All right. If you take a loss for the day, just call it a day. Because at that point, your emotions are going to start to get involved and you're probably going to take some bad entries. So my advice would say if you have a loss for the day, just wrap it up, call it as it is, and then come back the next day and redo it. Because the last thing you want to do is revenge trade your way into like say for example, you take a loss and then you're like, oh, I want to make that back right away. And then you end up taking another loss. And then now you're in the hole for two losses when you could have just had one loss. So yeah, I think you should be good, Arik. I mean, it's really just like, if you follow the strategy to the T and you kind of just let the trade breathe and you let it do what it needs to do, I think you'll be perfectly fine. But yeah, if you have any other questions, feel free to hop in the chat. Otherwise, I think that's it for the questions today. I don't really see anything else here. Let me check my messages over here real quick. Yeah, I think that might be it. It's a fake account. Man, there's a lot of scam accounts, guys. One thing that be careful for these scam accounts. I already knew this was scamming because I know Ricky. It's not him. Yeah, be careful with the scam accounts, guys, because there's a lot of people who are getting messaged by people in the group. I'm pretty sure some people just like accidentally clicked the link, and then now they're getting like all these spam messages already being sent out. Let's see, what's PC's question? Let me scroll up real quick. Oh yeah, no, for sure, PC. So PC wants me to go over some A++ setups. Yeah, no, I'll do that. So I'll go over a couple A++ setups over here. I thought we went over some earlier, no? But I'll go over a couple more just to show you. I mean, there's like because there's not just one way of the A++ setup. There's like a bunch of different scenarios. That was the thing that I had up earlier. Let me just have it up over here again. So let's go over here real quick. I'll show some that came up today if any did come up today. A++ setups right here. Let's see. Yeah, Vapid said he got a scam message yesterday from Kodi with the 0, not a O. Guys, just another reminder, I'm never going to like message you guys out of the blue. If I message you out of the blue, it's gonna be asking to confirm something like your email or something like that. You're never gonna get a message from me asking me like, hey, how's your day going? How's your trading going? It's not that I don't care about how your trading is going, but I'm not gonna message you that way. Usually their English is usually off, like the grammar is off, or the English is like kind of weird. So if you ever get a message from someone that you think is me, just read the message out loud. They're probably missing a couple of words and their grammar's off. And I'm never gonna ask you for Bitcoin. Never. So just keep that in mind. Yeah, Vapid said I'm trying to figure out what to buy on TradingView right now. It's still on 10-minute delay. So if you have so here's one thing, Vapid. If you are only trading on one account, and you have an Apex account with Tradeovate, just log into your Tradeovate and it'll give you the real-time data. If you're trading on multiple charts like me, so I have like a bunch of charts here, I pay for separate data because I have multiple windows open. But if you're just trading on one window, just log into your Tradeovate account down here. And then it'll give you the live data because it's included with your Apex. But if you're trading on multiple accounts like this, you got to go to your account settings, go to your profile, and then you got to add the data, which is CBOT. It's either CBOT or CME group. Yeah, if you're just using one chart, you're fine. It's going to be included, but if you want to have multiple windows open, then you'll have to pay for the data. I think it's like $4 a month with it's CBOT. Yeah, CBOT or CME group, whatever has YM on it. Because YM is part of CBOT. So you can see over here, it's CBOT futures. So you want to have the CBOT data. Here, let me see if I can pull it up. I don't want to show my login details, of course. So let me see if I can show you. It's under account and billings. Okay, here is, yeah, let me show you real quick. You'll see my credit card number, but it's okay. Okay, so when you go to go to your account and billing settings, and then you go down here to real market data, get real time data, and it's this one right here, CME, CBOT, COMEX, NYMEX. It's $7 a month. You don't need it, but if you want to trade on multiple charts, you can get it on there. But if you're just trading on one, just log into your Tradeovate, you'll have the data. Should be good. All right, cool. All right, so let me show you guys some examples of A++ setups. Let's see, there was one. Not this one right here. Okay, here's a perfect one right here. So this is going to be scenario number 3, PC. So here we go over here. So scenario number 3 right here is going to be for this setup. So look over here where it says, I have them in order, right? So the first one that came up was an MPSv2. There's a buy signal right here, price pushed up, retraced, it closed right here above this momentum signal. So this is going to be MPSv2, this candle right here, right? That's going to be the first one. So once you have that, you're going to look for another follow-up. After this MPSv2 setup right here, there's also a V1 and engulfing candle. So a V1 variation, but then it's also engulfing. So basically you're looking for another setup. You're looking for 3 setups back to back. So you're kind of looking for something like this. You're looking for, so MPSv2, then you got reversal continuation, which is going to be V1 variation or engulfing pattern. And then you're looking for another one after, another reversal engulfing pattern. But it did just depend on what you're looking for. So like, first you have an MPSv2 that happens right here, right? Price comes out, retraces right there. That's going to be the first setup. The second setup is going to be on the same entry candle. So you got basically on the same candle, you have 2 of them. You have an MPSv2 plus you have a reversal continuation. Then for the third one here is where your entry actually happens. You're basically looking for legs. You're looking for a leg of continuation. You're looking for this, right? First entry is right here, and your second entry. And then you got price pushing up. And then this is where your A++ setup comes up. So with this one right here, you got MPSv2, reversal continuation, and this is going to be the A++ setup. Because you have 3 that line up. Basically, for every scenario here, it's 3 setups. So you have one MPSv2, one reversal continuation, and then this one is going to be the actual entry for your A++ setup. So now that you have that right there, there's a setup, and this is, so you have an MPSv2. So the reason why we put this together is if, for example, if you missed the MPSv2, like say, for example, you missed it for whatever reason, and you're like, oh, I still want to get in. Now you have another confirmation over here for an A++, and this right here is going to be your entry for that trade there. So there's an example of A++. This is where the MPSv2 started, and then continuation right here. So let me see if I can find another one, like with different scenario. Like usually these legs, the legs would have to run for a while. So right here we have a sell signal, MPSv2, 1, 2, 3. This engulfing right here is going to be the A++. There we go. All right, so This is actually the same thing. This is another scenario 3. So we start off right here with the MPSv2, right? So price comes down, or actually this is not scenario. This is going to be scenario number 2. So reversal continuation happens right here on this V1 candle, right? That's going to be the first one. So that's going to be the first setup. The second setup is going to be the MPSv2. We have a sell signal here, price retraces up, comes back down right here. This right here is going to be the MPSv2. So we got the reversal continuation, and we got the MPSv2, and then this one over here is going to be the third setup. You're basically looking for 3 setups. It's like a 1, 2, 3 setup. If the A++ doesn't make sense, you could just say 1 setup or 1, 2, 3 setup. I mean, this should probably make more sense because you're looking for 3 entries, or you're looking for 3 back-to-back entries. So you got the MPS, or you got the continuation reversal right here. Then you got the MPSv2, which is right here. And then this engulfing now is going to be the third setup. Reversal, MPS, reversal continuation. So now you're going to be entering right here on this candle. Say for example, you're like, oh crap, I missed the MPSv2. I still want to enter, like you still want to enter this leg, right? Because you're like, this is a strong momentum. I want to ride this momentum further. Right here, you have the engulfing. And then again, you set it up 30-30. And now you're in the position. Price retraces up a little bit, comes back down, kind of sits there for a bit, and eventually it comes down and hits your TP. So earlier we showed scenario 3, now this is scenario 2. Let me see if I can find one more. So let's see if I can find them. Yeah, Barack said those A++ setups are bread and butter for CJ. Yeah, Christian, he loves these entries because they hit pretty often. All right, there's nothing there. I think there's another one. Okay, so here's another one, and this is going to be another scenario. So looking at this here, I'll put a line at this point. So looking at this one right here, this is going to be scenario number 1. So we did scenario 3, we did scenario 2. Now this is going to be scenario number 1. We have a reversal continuation right here. It's in engulfing V1. Just make sure you have the reversal indicator on because it's going to show you exactly where they're at. So you have an engulfing V1 right there. And then you got another engulfing right here, right? So first one, reversal continuation right here. Second one, reversal continuation right here. And then see how we have the sell signal? It pushes down a bit, retraces right here. And then the MPSv2 sets up on this candle, right? Because you have a sell signal, price pushes down, retraces, comes down. We got the reversal continuation, reversal continuation. This is the MPSv2. Now on this one right here, same thing. You got the setup right there. And then once it's lined up, perfect setup, retrace right there a little bit. Kind of bounces around for a bit, and then eventually it comes down and it hits TP. So that's pretty much scenario 1, 2, and 3. Scenario 4, actually, this lined up with another entry we showed up earlier. This is just when the MPSv2 lines up with a reversal pattern. Let me see if I could find one here. You know what? It's right here. Perfect. So we pretty much saw every single example here. Like literally every single example. This is not a good example, but I'm just gonna kind of show you this so that you have an idea. This is basically going to be scenario number 4. So for this one over here, we got reversal continuation. So we start off with this one right here. See, this is a engulfing. That's going to be the first, or point down here, engulfing, right? So this is going to be a reversal continuation. Then this is not a good example because it kind of lines up on the same level, but you get the gist of it. Basically, you have an engulfing right here. You get a buy signal, price retraces down a little bit, and then this candle pushes above this momentum. So this one is an MPSv2, but it also has an engulfing candle, right? So it's engulfing plus it's an MPSv2. So when you have that set up, you got that linked up right there. And then same thing that we just talked about. You got the setup right there, let the trade run, kind of pulls it down and draw down a little bit. This was at 8:30, so the volatility was kind of slow. But you can see here, it kind of bounces around a bit, but eventually it ends up going to where it needed to go. So this took longer than usual. Also, the ATR was extremely low. It was at 14 ATR, right? Trash ATR right there. And TP was 30 points. So this took like about 1, 2, 3, 4, 5, 6, 7, 8, about 8 minutes. But you can see that it still does hit. Yeah, no problem, PC. I forgot you can't come on during the live session, so you probably haven't seen these come up. It's basically just 3 setups with 1 leg. So basically 3 setups with 1 momentum. But yeah, if you have any other questions regarding that, feel free to hop in the chat. I'll show you another one if you need to see another one. But for the most part, it's not like one of those strategies where you have like specific requirements. You kind of just want to find 3 legs within 1 momentum signal. Because usually, so you see these other momentum signals, they're like a few bars, right? You get a buy signal, turns red, then it turns green, then it turns red, then it turns green. When you have a momentum signal that lasts for a while, meaning you got A plus setup here. Usually, if it lasts a while, that means that it's going to climb pretty heavy. It's going to keep pushing further. Same with this one over here, right? Like, some of these signals will last longer than others. And these are the ones that you really want to dig into. Like this one right here, right? Check this out. Buy signal. This thing lasts for a while. So it pushes up, you get the engulfing, you get the MPSv2, and then the A plus plus is right here. Because when you have those long momentums, like these long strides with these momentum signals, the odds of them pushing further are very likely. So again, right here, same setup, right? 30-30. MPSv2, V1 variation down here, and then this would be the A plus plus. Damn, see it shoots right through. So these don't come up every time, but when they do come up, they usually hit. You can see over here from this live session today, there was only one that came up today. There was 1 A plus plus, and I think that was it. I don't really see anything else here until the live session because there was news right here at 7:30. So obviously you wouldn't take the A plus plus over here. You'd just kind of wait. Like the A plus plus actually came up right at the it came up right at the news channel right here. So yeah, if there's anything else you want me to show you, PC, feel free to hop in the chat. Let me check if there's any other questions here. Yeah, CJ said I love those because when the MPSv1 is also an engulfing, it counts as a double pattern. In other words, A plus plus setup. Yeah, 100% Christian. That's exactly where it came from because you have multiple entries on one specific candle. Let's see, Babbitt said, I was surprised you hopped in your trade today before the candle closed because it was only 1 point above and it was going back and forth for a bit. Thought you would hop in late. Yeah, so the thing with the entries is that I don't really hop in late anymore. It's either like I'm in or I'm out. So for that specific entry, where was the entry? It was right here, right? Yeah, this was the MPSv2 right here, I think. Yeah, I know it was bouncing around for a bit. But then once it pushed up, like what I usually wait for is for the countdown. So see right, you can't see right here right now, but and let me go back to here. Let me just show you. Is the market closed right now? Weird. There's no countdown right now. That is weird. Yeah, it looks like the market's just closed right now. Well, usually there's a countdown right here, Babbitt. So like usually for the countdown right here, I would just wait until like the last 5 seconds, and then if it looks like it's gonna close green or whatever I'm looking for, if it's gonna close green or red, then I'll usually enter. For this one right here, it was like kind of bouncing back and forth, like up until the 10 seconds. And then at the last 5 seconds, it started to push up. So I was like, all right, for sure, it's gonna close. And then I ended up getting into it. But yeah, no, it only happens on certain days. Like today, the volatility was low, so we got that like kind of weird movement. But normally on a regular day, it typically wouldn't. it wouldn't happen like that. But it is what it is. Yeah, sometimes you just have to like you gotta take that trade. You gotta take the risk. That's kind of how trading is. Sometimes you just gotta, even if it's not for sure, if you feel comfortable with it and you feel confident, then hop right into it. But all right, guys, I think that's it for the day. We answered a lot of good questions here. So if you guys have any other questions, feel free to hit me up on Discord. Otherwise, we've been on here for about 2 hours. About time to take a break and maybe get back on a little later. What's up, Brock? Yeah, no problem, Vapid. Brock said, what was the name of the strat? I'll wait for you, Brock. You can type it out. You don't have to rush. Which strat? The consolidation strat. Oh, the consolidation variation. It's a CV entry. So basically, you're looking for a V1 that's also engulfing. So if you get a V1 that's also, let me see if I can find one here. It doesn't happen very often, but yeah, so it's right here. So see, this one is not a good one because it's so small, but this one's a good one right here. Oh, whoops. This one right here. So you have a double body rejection plus it's engulfing. So consolidation variation right there, that would be an inch right there for a sell. It's got to be like where the market's like at least decently volatile though. Like this one over here, this is against the trend though. You'd go for the consolidation variation, you would be going with the trend. So here's one right here, Brock. V1 and it's engulfing. So this would be a consolidation variation right there. Full TP. It's a good strategy. It's good in a sideways market. So like a consolidating market, it's pretty good as long as you trade in the direction of the trend. You got to make sure you're trading the direction of the trend. All right, guys, I think that's it for the day. If you guys have any questions, feel free to hit me up on Discord. Hopefully this mentoring session helped you out. If you guys have any questions, feel free to hit me up. Otherwise, we'll be back here tomorrow, same place, same time in the morning for the next live session. So, all right, guys, I'll see you guys back here tomorrow for the live session. You guys have